Good morning, traders. So how do we trade the Dow Jones today? So the Dow is in a pretty strong uptrend at the moment. So the only trade you should be looking for is longs right now. And we'll get down into lower time frames. But before we do that, I just want to double check our breakout targets here. So this triangle was broken, and there's the first touch to the top, and there's the first touch to the bottom. So that is the height of my range. Okay, so for me, on the breakout from the bottom, that would be the first target. That's kind of my conservative view on things. And then what you can also do is we can take it from the top here, which would give you a second breakout level, which would be there. And that pretty much lines up with this inside tail. And then obviously the third target to the upside will be this gap close. Okay, so let's just delete that, and delete that. Right, Fibonacci is the other thing that we need to pay attention to at the moment. And we're at the 61.8 right now. Okay, so let's just leave all of that in at the moment. And get down to the 4 hour. So, we're at the 61.8. Could be an area where we find some sellers come in, but there are some magnets to the upside. So I suspect we either consolidate or maybe close this gap and then move to the upside. But for now, this is an uptrend. We have trended down very strongly, and we consolidated, and we're now trending up. Now, look back in the past. If you were looking for longs here, would you be the wealthy guy, or would the guy that been looking for shorts all the way down be the wealthy guy? Okay, I'm sure you can see that red rules the roost in this scenario. And now look at this. If you were looking for longs, would you be the wealthy guy? Or if you're looking for shorts all the time, would you be the wealthy guy? Okay, pretty clear cut. This is pure price action. Downward trend, consolidate, break up of a consolidation, and we're in a strong trend. If you just look at your 5 moving average, you can see this trend is extremely strong, and it is pointing to the moon. Okay, so we are at a level here, so you're going to have to pay attention to what's going on at this level. But let's get down to the hour and have a look here. So from non-farm payrolls, you had this big bar on non-farm payrolls, which gave you an engulfing bar of sort with a tail, which was understandable at the 200 moving average. And then what happened was you came back to test this breakout tail. Okay, I haven't got it there. So price went up, and this next bar came all the way down, tested there, and then there was bullish action on the lower time frames, and that was long. So this move here, and you could have banked, I mean, I've banked pretty much on every peak. So banked on the close, and I banked yesterday up here, and also got back in up here, and I'm still holding that position. But be that as may, that is what, 500 odd points, 600 odd points on the Dow from Friday. And you won't see me looking for shorts in this scenario at all, because the shorts are really not going to pay me any money. Longs are paying me money, they're paying quite handsomely as well. So bottom left of my corner, top right, trend is up, and for as long as that stays in an uptrend, I am long. Okay, there's no reason, there's actually not even a reason to draw lines, because you can see just use a 20 moving average as your trend line. Okay, so 61.8. This is a very interesting level, and let's just get the open range breakouts. So yesterday, the gap up was immediately to the breakout target, but then consolidated. So what you'd be looking for is either a break of the fractional. For me, it was a break of these tails here. A limit order in there with a stop loss here was pretty much a 55 pip or something, stop loss that I had, and we accelerated up. Okay, I took profit on target 3, and then pretty much got back in on target 3 when I started looking at the lower time frames, because it was just consolidating here, and I'm still sitting long with that position. Okay, so let's just get rid of that. No, let's not get rid of that just yet. Let's just put that up to where we are currently. And this is a bit of a worry, because okay, so it's a very narrow range, and we've already hit almost hit target 4, but we pretty much hit target 3 at the moment from the gap up. Okay, so that is a bit of a worry, and we had the 61.8, which is another bit of a worry, but in my eyes, we're going to need to break below here, and if we do break below here, then we more than likely find some support at that level or at the gap before we have another attack at the 61.8 to get through. Okay, we have one breakaway gap. This could be the start of another breakaway gap at the moment. And in a scenario like this, you need to ignore your oscillators. You need to ignore stochastics, RSI, diversions, anything that you are using as a guide in this bottom block here. Because the trend is up, just follow the trend and you will be profitable. So what am I looking for? Well, clearly I'm looking for longs. And the question is, where are we going to get those longs? So I'll wait for the open and see what happens. So the European Open, see what happens. My entry, which was sitting pretty much down here, okay, is still in, and I've moved my stop up to below this bar here now. So I've pretty much locked in another 94, 95 points roughly at this stage, and we'll see what happens. But I am still looking for more longs, and the only reason that I would look for shorts is if we get a trend change. And that trend change will need to be on the hour as a minimum. So if I go back in history here, let's just zoom down a bit. And let's go see what a trend change looks like. Trend was still up. That was the first warning sign. We still made a new high. Okay. And there was the next warning sign. We've broken through the 20 and broke through the 20 again. And now the trend is definitely changed to the downside. Okay, so until that happens, I'm looking for longs and trading with a trend. Right, so the 61.8 is obviously a key level. We need to pay attention to it. So what you'll be looking for is a break. So let's just use this bottom line here. So a break above this level would confirm a move to the upside. Okay. A break below this level will confirm a move to the downside, but guys, it's not going to be a fall to the floor. It may, it may be to there, so it may be a 70.4. It may be lucky and it falls 132 points to come and test the 20 moving average. But for now, you should only be looking for longs. You do have a signal bar here, an inside bar that's indicating a move to the downside. But for me, I want to look for the second signal bar. If I get a second signal bar, then I may consider a short scalp to try and come and close these areas. But for now, this is just another range. So we've trended up and we're now ranging. A break of this range will continue to move to the upside. A break of this range to the downside will give us a height of the range, which will pretty much come and tag the gap here. And then I would still be looking for longs. Okay. So if you are long, no reason to get out. Just keep at it. Maybe just move your stop up to here to protect yourself. Or if you long from the bottom here, you can move a stop up to this area here or even below here. That'll give you more than enough wiggle room for it to come back. But you're going to need a 5 and a 20 moving average crossover and price to be below that for this trend to change. This has only just got started. Okay, so I hope that helps, guys. And if you like what you hear, please give us a thumbs up, subscribe, drop us a comment. Love to hear from you. And I appreciate the support. enjoy the day, guys. I'll catch up with you guys later. Cheers, man.